most people know how to make money. They know how to go out and get money. Most people are not short on that. They know how to get a little bit, at least. Some people learn how to get more than a little bit, and some people know how to go out and get a lot. Very few people, however, know how to do the second and third thing, which is how do I keep my money, not lose it? And then number three, how do I multiply money so that it starts multiplying? Everybody's got a different way to do this. And most of us, and I'm speaking for myself here, most of my career, I was just out learning how to get it. And then one day somebody said to me, once you learn how to get money to work for you as hard as you work for it, you're actually going to be, you could actually create a lot of wealth for yourself. I was about 35, 36 years old, and I made a decision right there because that really resonated with me to learn as much about getting money to multiply for me as I had spent time and energy learning how to exchange value with my customers so they could give me more money. And I looked at stocks, gold, minerals, commodities, treasury bonds, real estate. Crypto didn't exist at that time. I would be looking at crypto had it existed back then. And I'm looking at crypto today as something that could do that. And I elected to choose real estate for a couple of reasons. And by the way, I would still do that today. If you ask me crypto or real estate, I'd be like, dude, I'm doing real estate all day long. I'm trying to build something. I'm working every day and I get some money. This money comes in. The next thing I need to do with this money is protect it. Crypto can move 80% in the wrong direction at any given time, and it has repeatedly. So if I go out and get $20,000 or 20,000 pounds, and it's my first 20,000 in savings, and my first experience in investing is with a stock 20,000 and it goes down, that it can. Lehman Brothers went to zero. General Electric, a major company on the S&P 500, it was like a $112 stock. It sat at $9 for like 8 years. So you would have literally lost most of your money for a long period of time. TV does not report about all the losses. And when they do, it's briefly, and then they move back into the victories. So if I have my 20,000 pounds, I don't want my 20,000 pounds to go to 2,000 pounds. That hurts. And it takes my attention off when I'm going back to work again. It takes my attention off. I know every day when I'm selling something or trying to build my company, I'm like, oh, I got this loss over here. Same thing with crypto. Crypto does not provide income. Stock market does not provide income. The checking accounts, you can't leave your money in a checking or savings account today. Can't leave it in the bank. The bank provides no income. So my choice was to invest in something that, number one, I could not lose my money. I would not see the big gyrations. The kind of real estate I buy, I never lose money in. There is a piece of real estate that I invest in where 35 years, I have never, ever lost money. So number one goal for me is never lose money. Number two goal is never lose money. The third goal is I get cash flow. I need cash flow. This is very, very important. So I'm out. I have one income in the beginning. And what do I need? What do I need in addition to one income? I need a second income that I ideally don't have to work for. Okay. I don't want the second income to take attention from the first income. This is where people make a big mistake. They go out and get one income, they bust in their ass to get one income, and then they go invest in a second thing, start a second company, and the second company makes the first income half the income because they don't pay attention to it anymore. I wanted my first income to grow, my second income to take zero attention from me. So what I did was I took money from the first, threw it in real estate, put the money in the real estate. I don't lose my money. I know it's not going to go down in value. It's supported by cash flow. And three, I just wait for the growth of rent. And this is why I would say no to people on Bitcoin right now and Ethereum, any of the coins. Number one, you could lose your money. If you're just getting started, you don't lose money, man. Number two, you're not getting income. None of the coins pay income. Crypto does not pay income. And if you're 25, 35 years old, you need income, not just a score. Now, all that being said, I would say, look, if you're going to bet on crypto, take every penny you have, all the equity you have, borrow money and go all in on crypto. So I would not diversify. People don't get wealthy diversifying. By the way, if Warren Buffett could own all of Coca-Cola or AIG, which is what he started with, he would. He has, of all his investments, four represent 75% of his entire portfolio. Mark Cuban said that diversification's for idiots. Elon Musk has 3 investments in his portfolio. Steve Jobs had 2 investments, Pixar and Apple. It is not true. Only the financial planner who might not even be a millionaire would suggest that you diversify, or Wall Street or the banks. A banker will tell you to diversify, but there's no banker that's got $4 billion worth of assets. So I got $4 billion worth of this real estate right here. I have $2 million worth of Bitcoin. So I only have the Bitcoin because somebody gave it to me. So I had it a little bit once I understood it, or partially understood it. Look, I know that cash is garbage. Euros, pounds, pesos, whatever you want to call it, Spanish dollars, it's all garbage. It's completely made up. You know, I like the argument for crypto. I don't like the fact that when you're on the come up and you're 35 years old, what you need more than anything is income. You need a flow of income that you can depend on so that if you're not working or can't work or something happens, you still have income to pay for your rent or pay for your food, because you still got to eat. And most people, I haven't seen anybody going to the food to the store and trading their crypto for some Whole Foods. There's no cash flow. And now, if you're a gambler, dude, and you want to put it all, I would never put it all in. Why wouldn't you? See, this is the question I ask people. Dude, if you know for sure crypto's a play, if you know it's going to the moon, the Dogecoin, if you know for sure it's going to go to 100,000, then put everything in it. You see, I'm not that sure. So because I'm not that sure, I can't make that big bet. And the way to create real wealth is to make massive bets. If particularly with your story about, hey, I don't want to wait till I'm 90 years old. And Warren, by the way, Warren started when he was 50. He didn't make any real money till he was 50 years old. But I would just tell people, look, if you want to make massive money, then you need to go all in, first on you, second on your business, not on real estate or crypto. The best return in the world is your business. The best return in the world is an idea. I got an idea, I'm gonna write a book. I go out and sell 1 million copies of a book. There's no better return than that, because it came from nothing, right? It came from the mud. Now, once you got money coming in from the book sales, how do you protect the money? Okay, well, you go all in on one stock. You could go buy Amazon today, but I'll tell you, this piece of real estate right here will make more money for me and my family than Amazon will ever make. Because what'll happen with this real estate that you can't do with Amazon and you can't do with Bitcoin, I'm gonna wait 10 years. I'm gonna take all my capital out of the deal. I'm gonna refinance it, still own the asset, and get my down payment back. So I'll get my $70 million back, or 7 million, whatever the number is. This is a big deal. So it's $230 million. I could take it down to 20 million, or I could take it down to 2. It's the same math all the way across the board. It's just different zeros. But this asset class, this particular asset class, allows the everyday person to create wealth in a way that Wall Street has been doing for years, which is I buy an asset. It goes up in value because the income goes up without my effort. And then when it goes up in value, I refinance it, grab my initial monies out of it. Now I have that money back. It's a non-taxable event worldwide, by the way. Worldwide, that becomes a non-taxable event. I refinance the property. It continues to cash flow and pay me money, but I have no money in it. This is the true wealth formula, where we're using leverage against an increased assets value going forward. Let's say I have $30,000 or 30,000 pounds. I'm not going to put 10 in real estate, 10 in crypto, and 10 in Amazon. The only reason you're doing that, look, if you know red's coming up, man, bet all of it on red. If you know for sure. And then the audience is like, but you can't know for sure, Grant. Okay, well then don't do it. Then, because you're gambling now. See, and I don't want to gamble, okay? I busted my ass in the marketplace gambling. Knock is a gamble. Maybe they see me, maybe they don't. Maybe they buy from me, maybe they won't. I don't know. It's a gamble. It's a gamble of my time. Once I gamble my time one time and I get some money, I don't want to gamble the bag again. So now it's like, I'm going all in. I picked real estate because I know real estate over long periods of time, sometimes even short periods of time, goes up in value. I'm not talking about houses. I'm not talking about the top shops that are dependent upon retail. I'm talking about where people live and how they have to pay for where they live. The planet this planet will become a renter nation, a renter planet. People will rent where they live as a choice. People don't buy grocery stores. They go to the grocery store and get what they need. They don't buy hospitals. They go to the hospital, get their little thing and leave, okay? You don't buy a veterinarian shop, a dog store. You take your dog there, get your dog fixed and leave. Same thing with how people live. They will live for short periods of time, 2 or 3 years in one place. And when they get tired of that place, they will take their money and their credit and move to the next place. And there's nothing wrong with that. But my investments, I could actually invest in that disruption going forward, where people are like, I don't want to own a home. I want to travel the world. I might want to have a home in Egypt for 2 years and then go to Dubai for 2 years and then move to the United States of America and live there for as long as my visa is good for.